5 dividend stocks to buy July 2023. Welcome back to another Stock Dads video. My name is Chris, your host, and in today's video, we're going to be covering a whole host of different dividend stocks, some that are growth oriented and some already with a very high dividend, and they're in different sectors of the stock market, so I am ensured to be diversified. So make sure you smash the like button and let's get started. Now, just quickly before we jump into the first stock, I do want to point out that dividend stock prices and dividend yields do change over time. Depending on when you watch this video, the dividend yields could be different. Make sure you do your own research before you make any financial investing decision. First stock on this list is ALB stock, Albemarle. This is the world's largest lithium producer, $25 billion company. This has operations in Australia, Chile, and the US. One of the only companies right now that is producing any lithium in North America. So this is an incredibly important company, especially when you consider that electrification is going to be a huge trend in the next 5, 10, 20 years. EVs are going to cause a huge spike in demand for the foreseeable future, and you can see it on the charts. EV demand for lithium is going to increase over time, and lithium prices have already been skyrocketing over the past 3 to 5 years. Not only is lithium price probably going up, but their volume is also going to be going up. Albemarle, because of all of its operations in different countries and new mines that are going to continue to become operational, you're going to see, according to their forecasts, an average growth rate of 20 to 30% year after year after year. So over the past year, if you look at the Q1 earnings results, their earnings and revenue were up over 100%. So I personally think that this is a great company that is obviously cash flow positive and a very simple business to understand. And over time, as they continue to generate more profits, they've said that they're going to continue to increase that dividend. Stock number 2 is LUV, Southwest Airlines. I personally think that a lot of airlines here are incredibly undervalued, and it's still a good time to buy, considering that if you look at travel demand, it has actually been going up and up and up and up, and it's actually pretty much exceeding pre-2020 levels. And if you look at their Q1 earnings results for Southwest Airlines, they actually had a record revenue number, up 20% in revenue year over year. Of course, with Southwest Airlines, there was some issues over the last holiday season as many flights were canceled because of some technological issues. They did invest a lot of money into fixing those issues, upgrading those systems, and that shouldn't be an issue going forward. Profitability should be much better in the next 6-12 months and over the coming years. Southwest Airlines has one of the best balance sheets in the entire industry when you compare it to the other airlines, and that is what enabled it to reinstate its dividend and offer 2% at this point in time. As they continue to generate more profits, I do believe that they will increase that dividend. And simply put, the share price appreciation potential here is very, very strong. If you look at tech stocks, have they all been skyrocketing? Airlines are only just starting to catch up in the past month or two. Moving on to stock number 3, here is Charles Schwab. I mentioned this one a lot of times on the channel already, so I won't go on and on about it, but this is a leading financial services company, about an $80 billion valuation here. They have $7.6 trillion in client assets. This is primarily a brokerage company. You've probably heard of Charles Schwab having retirement accounts. You've heard of TD Ameritrade, which is now part of Charles Schwab. This went down a lot because of the regional bank crisis in March of this year. Schwab is currently trading at a 15 PE ratio, and if you look at the past 5 years historical average for the PE ratio, it's somewhere more around 22, which means that this stock currently offers a 50% upside opportunity if you do believe in the long-term potential of this company, if you do believe that the banking crisis will eventually subside, profitability will increase at banks once again as they reinvest the bonds that are expiring on their balance sheets into higher interest bonds, and simply the trend of people keeping more money in their brokerage accounts is going to reaccelerate and again boost the profitability of Charles Schwab. Already we know that Schwab's balance sheet is incredible. It just passed the Fed stress test that was placed on all of the largest banks, 23 of the largest banks in the US. All of those banks passed that stress test for a worst case recession scenario, and Schwab was actually the best financial institution on that list. As a result, many of these bank stocks are probably going to start increasing their dividends and increasing their share buyback programs. All right, number 4 is a more controversial pick depending on which side of the aisle you may sit in. For the purposes of this video, let's make it very clear that this is not an endorsement of any political stance or any sort of whether I'm woke or not, but the stock is Target, TGT. And Target has had a lot of controversy recently about its Pride Month merchandise, if you will. I'm not going to comment on that. But just strictly speaking from a capitalist point of view, from an investor's point of view, I'm buying Target because it currently pays a 3.3% dividend, which is much higher than most other stocks in the consumer staples industry. If you look at companies like Walmart stock, like Dollar Tree, most of them are not going to be paying more than a 3% dividend currently at this time. Now, if you look at the history as well for Target stock, you'll see that it has increased that dividend for the past 50 years. So a very, very reliable dividend stock that's going to consistently increase its dividend. And over time, if you continue to invest more shares and the company grows its dividend, your passive income stream is just going to get bigger and bigger and bigger, especially if you reinvest the dividends into more shares, right? The dividend growth rate is also very impressive over the past 10, 15, 20 years. That growth rate has consistently been 10% or more if you look at this chart. Lastly, number 5, BXP Boston Properties. This is also a not so straightforward pick, and it's kind of a contrarian pick because this is a commercial real estate investment trust, a primarily focused on office space real estate investment trust. So office spaces, as we know, have been in a really bad situation because of the whole work from home trend. Although that is starting to reverse itself a little bit, as you can see, companies have been forcing their employees back to the office at least 2, 3, 4 days a week. In some cases, trying to get them back every single day of the week. Its clients include a lot of those tech companies like Salesforce, like Meta, but it also has a budding life sciences side of its business with Biogen and some other life sciences related companies. That should offer the company a bit more diversity going forward. But as far as diversity goes, this does have over 190 properties in a lot of different geographies in the US. On a price to earnings ratio, it's trading only at a PE of around 11 and 8 times funds from operations. So that is a very low multiple when you compare it to all the other stocks in the stock market. And I believe with all the negativity around the space, I mean, this stock is down like 50% over the past year. I think that you're probably going to have more upside than downside. And we've seen recently that a fellow real estate investment trust in the space, SLG, managed to sell half of its property to an investment firm for at a $2 billion valuation. So that goes to show that these properties that REITs own are not worthless. In this case, at least with Boston Properties, this appears to be a highly profitable company still and the biggest real estate developer for office spaces. So there you guys have it. Those are 5 dividend stocks that I'm buying in July 2023. Of course, those are my own personal picks. Make sure you do your own research and decide if it's right for you. This is not financial advice, of course. Those stocks again were ALB Albemarle, LUV Southwest Airlines, Schwab stock, 4 Target stock, and 5 Boston Properties BXP. If you like these investment alerts and you want to get it in real time and also trading alerts for stocks, options, and crypto, be sure to check out the link in the description to our StockDads Discord premium membership. We also have a mentorship program as well as educational courses in there and a just phenomenal community of like-minded traders and investors. With that being said, good luck trading and investing, and I'll see you guys in the next video. Take care.